All right, good afternoon and happy Thursday. We are going live here this week, so hopefully this comes through okay. But here with you Thursday at 3, and got a lot to cover this week. We've got all eyes on the Fed as they get ready to talk at Jackson Hole this weekend, plus some really interesting GDP, GDI numbers came out that really lean in a little further into this recession debate. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise that we all hear along the way. So we are gearing up basically for what last week in August, heading into Labor Day coming up next weekend. So hopefully you are enjoying the end of summer, as hard as that is to say. And with that, I will share that many in the finance industry are as well, as they gear up for Jackson Hole this weekend. And one of the topics of our conversation is certainly going to be around that and the Fed's conversation tomorrow morning that the markets are just watching closely. Before I get into that, though, I want to share a couple items outside of it. The first is that we had new home sales come out at 511,000. This was the worst number we've seen since the lockdowns. So clearly some signs of some cracks in the housing market are starting to show. Housing market has been like this glimmer of light throughout all of the challenges here this year. But, with interest rates rising, it's very clear that is starting to impact buyers. And so we've seen this number certainly decrease quite a bit here as of late. We also saw initial jobless claims come out today on Thursday at 243,000. Which was slightly better than expected. Not necessarily a big win per se in the jobs market, but certainly good to see some numbers come out better than the expectations were. All right, let's turn our focus to where everyone else's focus is, I guess, this week, which is the Fed and his Fed Chair Powell's conference tomorrow at Jackson Hole, Wyoming. So basically, he's set to speak tomorrow, I think at like 10 a.m., I believe, Pacific time. And the market is just entirely focused on this conversation. There was a little bit of a longer period of time between Fed meetings. So they don't actually make their decision until mid-September or so. And with that, we've seen the markets speculating like crazy about what the Fed is going to do. The Fed's been very clear in their words as far as what's coming up. But the market is not necessarily believing it or thinking that maybe the Fed's going to raise rates, but have to pull them right back down right away. And so we've seen this kind of run up recently based on that. So we're getting, obviously, as you might imagine, a lot of attention on every single word that Fed Chair Powell is going to be going over tomorrow in Jackson Hole. So that will be really really important, to pay close attention to. However, what I want to really point out is, although this is important, the truth is that we still have another month basically until the Fed actually makes their decision. We still have another inflation data point. We still have another jobs week coming up next week. So I think that we need to just settle down a little bit. And obviously, we need to understand what the Fed is saying and where they're projecting they may go. But it seems like there's so much speculation around the Fed lately. And, obviously, for those who listen weekly, it's unfortunate that the Fed has just become the focal point of the markets day in and day out. But here we are again. So important to watch tomorrow. But again, especially for investors, not traders, take this with a bit of a grain of salt. We still have a long time until the actual Fed meeting. And more importantly, big data points coming out that will make their decision for them that he doesn't even know right now. So definitely important to pay attention there. Secondly, I wanted to spend some time talking about the recession, or again, in our eyes, maybe not so much recession yet, which is that GDP revisions came out on Wednesday, I believe it was, just yesterday. And they came out slightly worse than the first number, down 0.6% for the quarter. But more importantly, what I wanted to cover is GDI, gross domestic income. So this number came out and it came out strong. It's plus 1.4% for the quarter. And the reason I wanted to share this is because this GDI number is actually one of the top numbers that the NBER measures when determining whether or not we are in a recession. So we're hearing all this talk. You open up a dictionary and look up the word recession, we see 2 negative GDP quarters. Sure, but there's so much unprecedented things that have happened over the last couple of years that it's hard to say that that is the sole factor. And in fact, the organization that determines whether we're in one or not, again, looks at GDI, gross domestic income, far, far more heavily than they actually look at gross domestic product, which is actually towards the bottom of their list. But again, gear up. This is important for sure, I think, and especially for the bigger picture. But in the shorter run, the market's going to care a lot about every word the Fed says tomorrow. So gear up for that. We're going to kind of have all eyes on the Fed tomorrow morning. Coming up next week, we've got inflation, spending, and income all Friday. So we'll be covering that next Thursday. And then next week also kicks off jobs week. So get ready. That is probably, in my eyes, to be honest with you, more important than what the Fed says tomorrow. For the short term, what the Fed says tomorrow is going to be key. But, as far as a little more clarity, the jobs numbers coming out next week, next Friday, are going to be a little more important, I believe. So definitely a big week next week to pay close attention to. All right, with all that, we'll wrap it up this week with our question of the week, which is something I actually covered a couple weeks back in a little longer conversation on a Saturday. But the question is, what are the impacts of the Inflation Reduction Act? So here we are, late August, the Inflation Reduction Act has been approved. And basically the question is, well, what does this actually mean? And I want to share that, remember, this is significantly different than the Build Back Better plan that was originally proposed a ways back. So the Inflation Reduction Act really doesn't have a whole lot of impact one way or the other. You're going to hear politicians all day long till they're blue in the face, on one side saying it's the best thing ever, on the other side saying it's the worst thing ever. I don't know that it's really either, to be honest with you. I don't like that we are spending more in a period where, we've got some issues, obviously, on that front already. And typically raising taxes during a period of economic uncertainty can lead to some challenges in the markets. But neither of those items are really all that significant, especially as compared to the Build Back Better plan. So again, I don't think it has nearly as much of an impact as, you're going to hear a lot of politicians say one way or the other. The spending is not nearly as high, and the taxes are really pretty minimal, and if not, almost non-existent, because a lot of companies may find ways to reposition things and actually not end up paying a large portion of them anyway. So from as far as the impact to the markets and the economy, I don't believe it's really all that significant one way or the other. To be fair, there are certainly some things in there that will impact things, but not to the grand scheme of, moving us into a recession or seeing a huge market pullback or a huge market expansion. I don't think either of those sides of the coin are really in the cards from this bill. So important to pay attention to. And of course, if you are looking at buying solar panels or an EV, you'll probably get some benefits out of it. But more broadly speaking, from the economy, from the market perspective, really not a huge event. So I think it was really good to cover that, though. I spent a lot of time actually talking about this a couple weeks back. So if you do want to take a look at that, either let me know, you can send me a message, or just look at some posts from a couple weeks ago, and you'll see about 20-30 minutes where we break it down a little bit more. But hopefully that's helpful. We really look forward to seeing you next Thursday, because we got a lot to cover. Obviously, we'll talk about what the Fed says. On top of that, we'll talk about inflation, spending, and income, which are key right now in terms of what the Fed may do. And again, start kicking off jobs week, because that is what everybody's watching. So we'll look forward to seeing you next Thursday. In the meantime, again, enjoy the sunny weather if you're out in the Pacific Northwest, and soak up some of the rest of your August before we move into Labor Day. Have a great day. We'll see you next Thursday.